Disney was down over 40% in 2022. That was its worst year since 1974 as the media giant grappled with changing leadership and higher streaming costs. But as Bob Iger retakes the helm, what should investors expect in 2023? Yahoo Finance's Alexander Canal has the details.
That's right. Bob Iger returning as CEO of Disney was quite the shock for investors. But as he settles in once again to this role, there are several key questions he'll have to address in the new year. Number one, streaming profitability. How do you make money on a business that's burning through cash? Losses for Disney's direct-to-consumer division, which include Disney Plus, Hulu, and ESPN Plus, totaled $4 billion for the year as the company spent big on new content. As a result, Disney established a cost structure task force and warned of hiring freezes and layoffs in order to rein in spending. Management said it expects streaming losses to shrink by about $200 million in the first fiscal quarter of 2023 before reaching profitability in fiscal 2024. How Iger plans to get there is a key question that many analysts will be hyper-focused on in the new year. Number two, the future of Hulu. Will Disney finally commit to buying out Comcast's 30% stake in the streaming giant? To catch you up to speed here, Disney owns 2/3 of Hulu, with Comcast controlling the rest. Under the terms of the agreement, Comcast could require Disney to buy out its stake as early as 2024. Iger needs to decide the true monetary value of Hulu to the company's overall streaming strategy. Does Disney want to continue to run multiple streaming services, narrow in on Disney Plus, or have one platform that hosts everything? Which brings me to question number three, sports behemoth ESPN. Keep it or spin it off? Analysts seem pretty split on this. Some say ESPN is a valuable asset with lots of opportunity. Others say selling could help rationalize costs and allow Disney to pursue other business endeavors. Bob Iger will likely have to decide which side he's on in 2023. Speaking of high costs, question number four, park pricing. Will Iger do away with those Chapek-era price increases that upset fans earlier in the fall? In October, many customers were stunned to see sky-high prices for food, water, private photo sessions, and more at the parks, with the company announcing price hikes to admission tickets and its annual pass program in November. According to the Wall Street Journal, Iger was, quote, alarmed by the price increases. So will he reverse them? And then finally, who will be the next CEO once Bob Iger steps down in 2 years? According to Disney, Iger will, quote, work closely with the board in developing a successor to lead the company at the completion of his term. Possible successors include internal candidates like Dana Walden, head of general entertainment content, Alan Bergman, the chairman of Walt Disney Studios, and Josh D'Amaro, who leads the parks division. Other choices could include former employees like Kevin Mayer and Tom Staggs. Whoever it is will be handpicked by Iger himself. And considering how not so great it went last time, it's likely those conversations have already begun.